Ladies and gentlemen, please welcome Greg McCoach, editor of the Mining Speculator. Mr. McCoach is an ardent student of history and entrepreneur who has successfully started and run multiple businesses over the past 35 years. During the last 18 of those years, he has written his widely followed newsletter, The Mining Speculator, in search of exponential gains within the junior mining sector. Mr. McCoach is also founder and CEO of Amerigold.com, a bullion dealer in its 19th year. He has appeared on national news channels and is a popular speaker at both private and public conferences related to precious metals and mining shares. Greg, thanks so much for joining us today.
Glad to be here. So here we are, virtual conference. Hopefully everyone's had a good expo, heard a lot of good talks, got a lot of good information. Hopefully I can add to that today, and I do apologize for my red and watery eyes, if you can see those. Here outside Laramie, Wyoming, where they have the big Mullen fire, and all the smoke is causing problems for people. Anyway, we're in no imminent danger of the fire, but it seems to be a sign of the times down here in the United States. But anyway, let's talk about commodities. Let's talk about gold. What's going on with gold? So let me move my slide here. So the big picture, let's get right into this. Title of my talk, of course, is The Gold Bull's Just Beginning to Roar. I believe in the big picture, we're going to see sharply increased volatility in both directions for all markets, including gold, precious metals. We've just recently seen some of that volatility to the downside. Right? So the financial sewage is going to start to seep from behind closed doors as the public begins to understand just how desperate the situation has become in the financial world and elsewhere. I believe there's great potential for worldwide civil unrest, war, revolution, but particularly in the United States. What's happening here is hard to believe. As an American, I'm shocked by it, and I'm hoping for a better outcome than what seems possible. I also see a great awakening with regards to gold and silver by the masses. You know, precious metals are largely misunderstood by the general public, but I see a great awakening beginning, and that's only going to continue. This will bring shocking increases in precious metal prices to the public mindset. Gold and silver are going to much higher levels, and as this happens and continues to happen in the coming 5 years, it will really shock people. At the same time, I see, unfortunately, a great loss of liberty, privacy, and freedom as the PTSB, as I call them, the powers that shouldn't be in this world, switch us from our current failing fiat currency system to a digital currency. Right now, we're climbing the wall of worry. Gold hit a new all-time high recently, back in August, but a correction was in order. That correction is underway right now. We're currently right around the 1880, 1900 level, but I'm here to tell you the yellow metal is just beginning its upward trek and will shock investors as it keeps on climbing. We are in a long-term precious metals bull market that will eventually morph into a super bull market. It will last for at least 5 years. Some are calling it to last for 10 years. We'll find out. But the opportunities to profit are enormous for the coming years ahead in the precious metals junior mining shares, which are still greatly undervalued. So I tell my clients, have no worries with any pullback in the gold price, silver price. It's a great buying opportunity. Use those dips as the chance to accumulate physical metal or the quality precious metal mining shares. I love this Richard Russell quote. He's no longer with us. It'd be great to still have him here where he could weigh in on what's going on, but I think this quote really sums up what he would say. As gold works its way higher and as central bank inflation continues, then the great unwashed public will become increasingly concerned with protecting their purchasing power and protecting what wealth they still possess. Thus, The fear of loss of wealth and real purchasing power will continue to power the great bull market in real money, which is gold. He was a big supporter of gold. As I listened and read him in the 90s and as we crossed the millennium in 2000, gold was trading for 170 bucks an ounce. And look what's happened. It's all come true. Ronnie Stoffoli of Incrementum had this recent quote. I wanted to put this as a new slide in my presentation. I read his article. I really felt like he had a lot of good things to say, but he called it the dawning of a golden decade. I don't know if it'll last for 10 years as he does, but I'm saying we're in bull market, super bull market territory for at least 5. His quote was, "Monetary policy normalization has failed. The coronavirus is the accelerant of the overdue recession that heralds the dawn of a new monetary world order." Big words. Trend-setting monetary and geopolitical upheavals are to be expected in this environment and already executed by the Federal Reserve relaxing the inflation target average 2%, supporting a medium-term inflationary environment. Obviously, inflation is very good for gold, but the kind of inflation that I see coming is going to be unbelievable. So gold and silver are in bull markets versus all fiat currencies worldwide. Fiat currency, fiat, the word fiat meaning backed by nothing but political mumbo jumbo, deception, deceit, lies, political rhetoric. Gold and silver rise because it's like the canary in the coal mine. It tells the public something's wrong. Well, something is wrong. Gold would not have hit 2000 plus if everything was good, as they want you to believe. It's a fantasy. Gold keeps pushing higher because it will soon expose the rot that is in the financial world. Some currencies in this debacle will lose more than others in the coming years. As this happens, you should understand that quality precious metal mining shares will exponentially outperform gold, silver, and the general stock market. That doesn't mean you shouldn't own the physical metals. I've always believed that the combination of owning bedrock, physical gold and silver, which you take delivery of, along with the quality precious metal mining shares, is the best way to roll in this coming environment. The best thing I can do for my subscribers of my newsletter, The Mining Speculator, is to help them figure out which precious metal mining stocks would best fit their investment portfolio strategy. Okay. Within the junior mining space, there are exploration companies, there are development plays, and there's production stories. But it's also important for me to help people understand why they need to own the physical metals, which I spend a lot of time at the conferences expounding on that. So when I talk about the differences with the mining stocks, some are better suited to more conservative producers. They don't want the risk of exploration stocks. They won't get as much upside, but they have less risk. If you believe gold and silver prices are going higher, sticking with the quality conservative producers is a great strategy. Others, however, like playing the slow-moving but sure development stories. There's a little bit greater upside potential with the development stories, but they don't really kick into gear until production really gets ready to ramp up and move forward. You can wait a long time waiting for those, but when they finally produce, it's a nice big upward move in the stocks. And still others, like me, like swinging for the fences and want to play the very volatile exploration stocks that can be up 80%, can be up 5x, can be down 3x. They're all over the place. But you need to understand where you fit in within the mining space and make your investments accordingly. I think this is one of the key things for a newsletter writer to help his subscribers find that niche within the space that I'm in. I do recommend producing companies. I do represent exploration stories, and I do have development stories in my newsletters. But I want people to understand the opportunity to profit is enormous over the next 4 to 5 years. And as Ronnie was saying, maybe longer. So I'm all about, this has been my message, my mantra for the last year and a half: sell overvalued markets, buy undervalued markets, sell the overvalued Dow, S&P, NASDAQ stocks. They're grossly overvalued in my view. The undervalued precious metals junior mining shares are going into the stratosphere. Those are the markets you want to buy right now. They're getting ready to move in ways that I think people can't even understand at this point, but they will as time goes on. You don't want to miss this move. You can still buy at rock bottom prices. As we're moving forward, buy the dips. As gold corrects, the mining shares will correct as well. Sell the rallies. When gold hits a new all-time high, you see one of our mining shares hits a new all-time high, sell. Take some profit. Build full positions in the best of class companies, however, over time. But use these dips to buy, sell the rallies to cash up again. If we get a severe hit to the markets, and COVID-2, which is being talked about quite frequently in the news right now, look to buy the best of the best quality junior mining shares you can. The COVID, any market event that knocks us down, look to buy on those dips. Again, own a combination of physical metal and the precious metal junior mining shares during this time period, but buy the dips, sell the rallies. Right now, I still see a lot of believers in bubble world. They're everywhere. Most investors are still betting big on the general stock markets with the hope of unlimited bubble money from the Fed. But it's starting to run dry. That is until it runs dry, but it's already starting to run dry. I got to update that slide. Here's why. This chart just should tell people that the bubble markets are over. The bigger the gap between price and profits, the bigger the fall of these markets is going to be. Profits are stagnating. That's the red line. As you look for the last 3 years, corporate profits are flat. How can the stocks be booming? Well, it's just the Fed funny money. It's just bubble money they keep pushing into the market. It has to go somewhere. It's gone into these main markets. But look at this gap. It's a total disconnect. So the gap is just getting more and more absurd. But the bubble money is being withdrawn as we speak, and I believe the fall is imminent now. So sell these overvalued markets, buy the undervalued markets. What few realize is that we are now in the final chapter of an investment game that will end badly. This is a quote from Egon von Greyherz, the Swiss fund manager. Major stock markets in many countries, including the Dow and S&P, are now finishing their bull market moves, both short-term and long-term. The fundamental position has been indicating high risk for quite some time, and the technical picture is now confirming that we are ending a major secular bull market that will turn into a catastrophic secular bear market. I believe he's right. I've bet big on it myself. I'm trying to teach others to do the same. He goes on, and in this slide, this is an Egon von Greyherz slide. I really hope that what he's saying here does not happen. This would be awful, but this is a pretty smart guy, and he's been right now for quite a long time. He's talking about stocks, general stock market prices declining by 75 to 95% in real terms as these bubbles implode. Bonds lose 90 to 100%. Property values implode 75 to 95% with interest rates at 15 plus and no credit available. Private equity investments losing 70 to 100%, slaughtered by high leverage and rates. Cash will either be bailed in or lost with bankruptcy of banks or totally debased by governments. I mean, this is like Armageddon, financial Armageddon. Again, I hope none of this happens, but I think I have to show both sides of the equation here. We know there's going to be problems. We just don't know how bad they're going to be. Obviously, Egon's on the very, very bad side. But when he says in this last item, cash will either be bailed in, bail in, there's no more bailouts. Bail in means the banks will take depositors' money to bail their own selves out. These are shocking things, I realize. A lot of people don't want to hear this, but I'm the type of person, I can't bury my head in the sand. I have to listen to all these various opinions, and I think there's a place for them in this environment we now find ourselves, where the bubble markets are going to implode. We just don't know how bad it's going to be. The Dow Gold ratio, back in 1980, it was 1-on-1. I believe we are going to correct to a level that is below one. So that means, current Dow price, in the mid 20,000, 26,000, 27,000. Gold price at 1,900, let's say. That ratio is, 20 some to 1 right now. But I believe we're about to turn down. The turn in the Dow, I believe, will be the start of a rapid fall in the Dow gold ratio, and thus a very strong upward move in gold and, of course, silver. Gold will continue to move higher. Here's why. Gold is the only safe haven left for investors. The bond market, which is usually the place that funds go when the Dow stocks are having trouble, is destroyed. Negative yielding interest rates have destroyed the bond market. Eventually, as conditions worsen, investors will find their way to the precious metals. The latecomers, however, will pay top dollar if they can even get any. So now's your time to do it. You're still an early adopter if you're oriented towards the physical precious metals and/or precious metal mining shares. Here's the big tell, though. The silver and gold overall open interest on the COMEX. We've been talking about this for years, but the open interest is the paper in the markets that are only backed by the exchange's good faith, not the physical metal. So when the physical metals run dry, as they are right now, the price will break free as the demands for physicals get forced upon the COMEX, as manufacturers will demand the product by purchasing the physicals at any cost in order to stay in business. This is, watch the overall open interest. It's showing you that the game is up for the people who have been playing this game, and the shorts are getting burned. So it's a big reason why gold and silver will continue to move higher. There's also dozens of potential black swans that could act as catalysts for this ongoing scenario. I believe the next Lehman Brothers AIG moment is already underway. The public just doesn't know about it yet. With such a gold price, the major gold producers will be raking in the profits as this happens, which will prompt buyouts of top-notch discoveries and massive reinvestment into exploration. This will also be the key to further prompt more funds back into the exploration sector. When those funds come into that exploration sector, all the boats float. They're just dipping their toes in the water right now, but they're coming, and they're going to come in with a vengeance. M&A activity will begin to increase in 2021 and beyond. It's going to be take this bull market in the precious metal junior mining shares into a whole nother orbit. And it's going to be fun. We're going to make a lot of money. I just worry about what's happening in the big picture in the world. What kind of world are we living in? John Rubino left with this quote recently. I put this as one of my last slides. We have entered, he said, a new stage, which feels like one of the end stages of this whole bubble process. And I throw bubble in there. When governments give up and don't even pretend to try to control their finances anymore, well, we're there. That's what's happening. That's when it will be clear to everybody that this is the case, and then your goal goes through the roof. The investment thesis ends with you loading up on precious metals and then riding the inflation and our monetary reset that has to happen because of past mistakes. Yes, we are there, folks. Unfortunately, this is the big one. The best way to roll, in my view, just reviewing what I've said, have a combination of physical precious metals that you store and protect from fire and theft yourself. You can't put it in a safety deposit box at a bank. That's like an oxymoron. Safety deposit box, bank, and ownership of the highest quality precious metal mining shares. Sell the overvalued markets now, buy the undervalued markets now. Depending on your level of risk taking, you should understand where you fit within the junior mining space, whether you want exploration, development, or production companies, or a combination of all three. With the mining shares, remember to take profits every time you get them. My rule of thumb is every time you get to a double, sell up to half your position, play with the casino money, pay yourself back so you have absolutely no risk moving forward. Take a preparedness mindset with what's going on in the world. there's going to be problems. We don't know how bad, but there's going to be severe problems in my view. Taking a preparedness mindset is just logical and makes sense. And please remember, ownership of physical precious metals will be the ultimate form of money. It'll be bedrock to you when fiat currencies collapse. For those of you who are oriented to buy the physical precious metals, I own a bullion dealership in the United States. Up in Canada, I don't ship to Canada. I recommend kitco.com. I know the people at Kitco, they're good people. If you're in America, you want to buy from Amerigold, please call us. Look us up at amerigold.com for those looking to acquire physical gold, silver, platinum, and/or palladium. My two newsletters are the Mining Speculator and Insider Alert. To subscribe to any of my newsletters, go to www.discoverynexus.com. Thanks again for listening. We'll open it up to the question and answer period, and we can go from there.
Greg, thanks so much. Now, I do have some questions here. You may have addressed them throughout your presentation, but I'm going to go ahead and put them to you anyways. How to choose the best silver or gold mining company and when to sell it?
Say that again, the first part you broke up there.
How to choose the best silver or gold mining company and then when to sell it?
Okay, great question. Yeah. When I make recommendations in the newsletter, it goes through a filter process. There's lots of companies that want my attention because they want me to recommend them and get a big, broader audience watching their stock. I say no a lot. I probably evaluate 30 or more companies a month. Most of those companies I say no. It just doesn't have what I feel it takes to be, a high flyer, potentially a high flyer. I don't even look at companies unless I see 10x potential. And so a lot of the companies I'm involved with are exploration and development oriented, but I do have some production companies in the newsletter as well. Once I get to a point where I'm ready to recommend a company, I'll recommend it as just a buy, or sometimes in very, very special situations, which don't happen too often, I do a strong buy. And so those are the ones you really want to pay attention to. As an example, Great Bear Resources was at 30 to 50 cents. I got my Insider Alert member people in early at the 35-cent level. Mining Speculator people bought between 40, 50 cents. 2 years later, here we are. The stock recently hit a high of $19.83. We're trading in the $16 level right now. Wonderful gains, okay? That's a success. We have those types of successes. We lose sometimes too, but in general, we're in a super bull market. We're going to be making a lot of money in the coming years. So when to sell? Selling is an art, and I say, look, when you get a double, your stocks have doubled, I highly recommend selling up to half your position. Don't get greedy. Pay yourself back. Once your initial investment's paid back, you can still play with the other half and see how high the stocks are going to go. I think that's the best way to roll because we're going to see such volatility in all markets. I believe that the mining shares will see huge volatile swings in both directions. We just saw one with the gold price after hitting a new high in August. We backed off. We're in correction mode. The mining stocks have taken it on the chin. It's a good dip to buy, but when it runs to a new high, like in August and September, I was telling my people to sell some shares, take some profit, pay yourself back. So that's a strategy. I think it's critical to play that way. I know human nature is we tend to get greedy. We see it double so quickly. Sometimes we want to go, oh, is it going to go 3x, 4x, 5x, 10x or more? Well, sometimes yes, sometimes no. The way to play it is always pay yourself back and play with the casino's money. And that way you're protected. Next question.
And thank you. Can you tell us what your current junior mining stock recommendations are?
Yeah, for protecting my paid subscribers, I'll share one with you. Okay, at this point, We're in an unusual situation right now in the exploration world because of the super uh, bad market we had from 2012 to 2018. A lot of the assay labs, which assay the core that the exploration companies generate, is very backed up. A lot of those companies in that bear market, that wicked bear market in our sector that we had 2012 to 2018, caused a lot of these companies to have to go out of business or lay off a lot of their quality people. So now that so much money's going into the ground, we have a huge amount of drill core that needs to be assayed from this summer's and fall's exploration season. And core is just sitting at the labs waiting to get assayed. One of the companies that I really like that has 45 drill holes and no assays back yet is Scotty Resources. SCOT on the Canadian side, SCOTSF, I think. Don't quote me on that. I'm not looking at it right in front of me here on the OTC bulletin board. You can look it up, but it's SCOT on the TSX Venture. They're in the Golden Triangle, an area in northern British Columbia that is highly speculative for high-grade gold plays. Uh, I've been involved with this company for over a year. I really like it. I have a big position. I'm waiting on these assays. We're crossing our fingers and hoping. For those of you who have just listened to this and want to take a shot, I think this is a really good one. Scotty Resources. Next question.
Greg, thank you. Do you like the junior mining equal weight ETF as a way to participate?
Yeah, I think that can make sense for people who want to play a conservative way. Um, you're not going to get a lot of these high potential high flying exploration stocks in a situation like that. But I do think it makes sense for some people to play it through a fund scenario. That can make sense. Next question.
Would you give us your top silver and gold stock to hold through the upcoming turmoil?
Like I said, I don't want to reveal too many of the stocks that paid subscribers pay for, but I'll give you some companies that I think Alexco, as far as a conservative silver play, that's a no-brainer at this point. I remember back in 2015 when the market, our junior mining shares were in absolute despair. I recommended people buy Alexco. It was like 30, 40 cents. It was ridiculous. Okay. Um, when the market bounced back, it it hit like $7 Canadian. So that was a huge gain for us. Um, and now it's trading for like $3.60. The all-time high is over $10. I think we're going to get that and much, much more. So Alexco as a silver play, it's a primary silver producer. There's very few companies that produce silver the way Alexco does. It's usually mined with other minerals like copper, lead, nickel, zinc. But I like Alexco. AXU, I think it is the symbol for both New York Stock Exchange and TSX. That's a great silver play, conservative. It's been in my newsletter for a long time, and we've already done well on it multiple times. I think we're going to do even better. I'll leave it at the silver play. I won't go into a gold play right now.
All right, thank you. Now, how much of a portfolio should be in precious metals and junior mining stocks?
Well, that's a great question. It just depends on how you look at the world and what's going on. Um, I have clients, very, very high net worth clients, a billionaire client that has 25% exposure to the precious metals. For him, that's a huge position. Um, but it's just a personal opinion. I would say very conservatively, 5 to 10% of your liquid net worth should be oriented towards physical metal that you own, take delivery of, and quality precious metal mining shares. I have some people that have 50% of their liquid net worth in the precious metals at this point. So there's a wide variance there, but it's really how you, the investor, look at what's going on in the world. If you take an approach that I do and you look at my slides and you say either this guy's crazy or he's right on, um, we'll find out which one. But I just think that I talk to a lot of investors. I think most of the people that I talk to, they know problems are coming. Okay. Maybe some of us don't want to believe like Egon does that it can get as bad as what he's talking about. And I certainly hope that that doesn't happen either. But, you know, it's a personal choice. To have physical precious metals and quality precious mining shares is, a no-brainer at this point. But how much is really a question of how you feel about things. Next question.
Thank you. Now, due to the generational change with millennials' investing preferences, do you see Bitcoin competing with gold or becoming preferred to gold?
No, I don't see that at all. I don't think Bitcoin's going to be part of the new digital currency. I think the powers that shouldn't be in this world have their own digital format, and they're going to use that one as they switch us out of dollars into digital dollars. Bitcoin has a place, but if people would look, I said at the time, you know, when all the cryptocurrencies were coming out, I said most of these things are absolute garbage. Don't touch them with a 10-foot pole. Bitcoin, Litecoin, which I did mention at one of the money shows a couple of years back when this was all happening, I did mention, Ethereum and Litecoin as maybe the only other alternatives that would make sense. We made a little money on Litecoin, but I'm not a big participant other than those three. I'd stay clear of the cryptocurrencies.
Okay, and with the recent strength in the dollar, which looks like we will have a few weeks of rally in, how do you think the metals will be affected?
Well, this is it. The gold and the dollar inverse relationship is back in play again. But listen, the dollar's strength recently, this is all convoluted. It's the powers that be in this world know that the current fiat currency system hinges on a strong dollar. They are desperate. They are doing everything behind the scenes to prop this up. They have to, because once the dollar goes, it's over. These markets are going to get trashed. So a strong dollar policy is the only way they can keep this current system afloat. And that's why that's happening. But look, gold is going to win this battle. The dollar is going to be trashed. The people who run our world, they know this. They know. And COVID, I believe, is going to be an accelerant that brings this about much quicker than what I was thinking. Some are speculating that the new digital currency, as the dollar gets trashed, they'll switch us out. I call it the big switcheroony. We'll go out of dollars into digital dollars. During that changeover, people are going to find out how much of the true purchasing power of their money they've just lost. I'm saying we could take up to an 80% haircut in that transition. This is why you got to own the physical precious metals and quality precious metal mining shares. You have to have exposure to gold. So overall, I see this recent dollar strength as just another attempt to prop up and keep the fantasy going. But we're at the last stages of this. The dollar is going to go down. You got to own gold. Next question.
All right, Greg, I'm going to have to wrap it up now. I so appreciate you joining us today.
Glad to be here. Everyone, enjoy the rest of your day and rest of your conference. Thanks for listening.
Okay.